All right, welcome to the Plan Confidence Investment Advice System for Washington State employees. I want to show you guys how to get signed up for this system, how to log in, and how to use it to its fullest. So let's first dive right in. So to sign up, once you find one of the links to sign up, it'll take you to this page here. This is our school platform, our community. There's the free plan option. This is not where you want to go. You want to go right in the middle here, the big one, where it says Professional Investment Advice for Plan 3 and DCP. This is the current pricing on it. So if you click on here, you'll be enrolled in the system. And once you're in there, you're going to get access inside the classroom tab here. You'll have access to something called Plan 3 and DCP Investment Advice. So for that $39 a month, it's enrolling you in both Plan 3 and DCP investment systems. So you get investment advice on both plans. So you're going to click into this here. There'll be this link to actually, submit your information, because we need things like date of birth, address, phone numbers to get you enrolled in the actual system. So first you click on that. Down here, you'll have step-by-step instructions of how to actually log in, and you actually will get an email. This is the email I get. I'm assuming you guys will get something very similar, if not the exact same thing on your end. Here, it just shows you, where to go to log in, what your initial password is and such, and just when you get in there, go ahead and change it. All that is spelled out for you inside of there. Now, once you actually create it, you'll get into the system. It will look exactly like this. You'll have a pop-up, and it's all the disclosures saying who Plan's Confidence is, who Scenic is, yada, yada, yada. It's a bunch of legal jargon, things we have to say. You hit accept, and then you're in. Keep in mind that anything you accept isn't anything weird. We don't ever take passwords. We're not placing trades on your behalf or anything like that. All this is giving you recommendations. It's 100% up to you as far as if you want to follow the advice given to you and when to place your trades. We don't do any of that stuff. Right? So once you're in and you accept the agreements, next thing is to choose your profile. So on the top end here, you'll have the name of the current plan you're selected to. So this one is for Plan 3. This one is giving future and current allocations. So future is all the new money that hasn't been put in the plan yet. Current is the money that's already in the plan. So you'll see here, I have two sections selected. There's future contributions and current allocations. Now, you don't have to do the future contributions. Most members don't, but I do make that available to you. So if you wanted to get ahead of it and you want to say, hey, for this next upcoming paycheck, I want to put it in a place that I think it's going to grow or be more aggressive because I think the market's down. I want to capitalize on the down market coming back up, something like that. Our future contributions, that's what it's trying to do, is trying to identify things or sectors that are weak, so we can put our dollars to work harder in those weak sectors that we expect to recover in. So that's the future section here. Now over here, really important, contact corner, please don't use this. I know it's very convenient for you guys, but this does nothing. It's actually more of an annoyance than anything. And I keep telling Plan Confidence to change this, and they haven't done so yet. Clicking yes, I trade my account does absolutely nothing but send me a one-line email that says someone's to trade their account, and that's it. I really don't need to know that. So if you guys could just not use that button, because it's about as useful as udders on a bull. So it doesn't mean anything, so don't use that. This one here, please have you contact me, same thing. I get an email saying so-and-so asked you to contact him, and that's it. Then I have to, figure out what your email is, send you an email saying, hey, what do you need help with? Wait for your reply. And it just takes longer to get support that way. Again, it's annoying. And anything that isn't like one click, response really makes it easy for me. It's going to take a little bit longer. So if you find the quickest, it's just go ahead and click this. Just email me directly saying, hey, I'm having this issue. I have a question on this. And I'll reply a lot quicker than if you use this button here. All right. Now, if you have more than one plan signed up, so if you're on Plan 3 and DCP, where it says your plans, you'll be able to click between these two options here. And it'll balance between. So now I'm on Thrift Savings TSP plan. It's what federal employees use. But yours would say, DCP, 403B, whatever plan you have enrolled in, that's what you have in here. So I'm going to flip back to Plan 3. So your first order of business is really just going in here. It's going to say select risk profile. Once you've selected, it'll say update like mine just did there. It's going to say, hey, how do you want to be invested? What portfolio you want to use? Now it has the name of the model and type of strategy it's following. And then there's descriptions of each one. It can be really overwhelming because there's about 10 different options here. But from a high level, anything that says strategic, all that means is we're going to rebalance so once a quarter. So January 1st, April 1st, July 1st, October 1st, you're going to get an email saying, we're going to change your allocations. Please follow these steps. That's all strategic is. And you see there's five different models that have strategic at the end. And then we have tactical. Tactical is when we actually track the market on a daily basis. We look at 3 key indicators. And when 2 of those 3 flash red at us for a period of more than 2 or 3 days, that's going to be essentially a warning sign, and we're going to say, hey, let's raise some cash. Now, how much we cash will depend on a couple of factors, but at any rate, you'll get an email or push notification if you have the app saying, hey, if you're in this tactical model, please move 20% to cash or 50% cash, whatever comes out saying, so tacticals can trigger any time of the year. It's not an automatic one like strategic where it's the beginning of each quarter. It can happen at any time. Sometimes it can happen twice in the same month. So if you want to be a little more hands-on with it, that's the tactical part of it. The whole point behind tactical is moving to cash to try to protect yourself from market drop, and then redeploying cash at the bottom. That is risky because if we get this wrong, move too much to cash, and we don't time the bottom correctly, or if there is no bottom, market keeps going up, now you have to buy back in at a higher price. So tactical, it makes sense if you're going to be on top of it. Then this is not a bad option to go. Keep in mind that Plan 3 and DCP doesn't actually allow you guys to make transfers more than once per month. So if we say, hey, raise 10% of cash at the beginning of January, and then later that month we're saying, hey, let's go to 50% cash, you can't raise any more cash until February. So you can't be as tactical as you want to be inside these travel portfolios, which is why when you retire and you go to your own individual retirement accounts, your IRAs, they don't have those rules. You can be a lot more tactical with your portfolios. But at any rate, this is all it's saying is, hey, you can go ahead and pick which one you want. If you're like, hey, I don't know what I want to do, there's a risk assessment button. You can click on this. It'll ask you a series of 15 to 20 questions, and then they'll highlight which one they think you should do. And usually they highlight both. So if it comes back aggressive, they're going to highlight aggressive strategic, and you'll have this aggressive tactical highlighted. At the end of the day, it's up to you, and you can always change it. So right now, I'm on the aggressive strategic option. So if I like that one, I go ahead and hit submit. Next, it's always going to ask you, is there anything you don't want your money to be invested in? So through Morningstar, there are all these different sectors of the market that you can be invested in. So here's global flexible bonds in Europe. Then we have USD diversified bonds. And you can see there's a lot of different things that you can invest your money in. Mid-cap blend, mid-cap growth. With Plan 3 and DCP, you don't have access to probably even 3/4 of these. So for the most part, this is going to matter too much. But if you do feel strongly like, hey, I don't want any money into the healthcare sector, you can uncheck it. And anything that has money going to healthcare, it's going to take that option off of there. So this is where you can really personalize it to your specifications. Fair warning though, what I've seen get the best results is people that just leave these all checked, invest in all areas. I had some people going through here and uncheck literally everything except 2 or 3 things they actually understood or liked. And because these are mutual funds or private sectors, most of the Plan 3 funds were in those, and the investment recommendations they gave him weren't great, and he was underperforming the market. So it's best not to be too picky when it comes to that option. Once you hit that, you'll come back to the screens. Now you notice this is where we started at. This is the future, again, optional. Right now it's saying 80-20. This is the one that everyone needs to pay attention to though. This is the current money you have inside of your account. That's what it's saying. So it's saying right now, if you want to be aggressive, move 66% into this large cap fund. We'll move 8 to emerging, 6 to global, and 20% to bond. Right now, you see this is beginning of the quarter, January 2nd. So this thing will update till April. So for the most part, this is going to stay set in stone. This one will change every single month of the future recommendations on it. And this is only because we choose the strategic option here. So this just tells you how much to put in each sector. So then you would log into your Plan 3 DCP account. You go hit place trade, and you move 66% inside of here. Now, one thing you want to point out is, see how it says proxies? Anything that says proxies means the fund that we actually wanted wasn't available. So this is the next best thing. If you click on that, it'll show you exactly what it's doing. So these are the different funds available inside of Plan 3 and DCP, right? You have your small cap, large cap, global, emerging, short, and then we have all the different target date funds, and then we have Washington Bond Fund. Here's your social responsible fund, things like that. So these are all of our options on here. Now down here it says, here's your report. And they have one report for future and one for current. So if we go to current, it says we have 10 funds. So it's saying the model wanted 6% into U.S. foreign large value category, but that's not an option with Washington State's Plan 3 or DCP. Therefore, the U.S. world stock category or this global equity is the next best thing, and that goes with that. Same thing with that here. 2% wanted to go into commodities. We can't do that. Large cap's the next best thing. So this report is just going to show you what we wanted, what we have to substitute for. All right, so that's how proxies work. So up here, that's how you get to your account, see all your personal information. Allocations will get you back to here. And for the most part, that's all there really is to it. Now, if you want to change your investments, so like, hey, I don't want to be aggressive anymore and market doesn't look too good. I want to be conservative. I can come on here, say conservative, hit go, make sure it actually goes through. Then there's your, pick what funds you want. I leave everything in when I do it. Go submit, and boom, now it says I'm in conservative. You can see that the future changed. It was 80-20, now it's more of a 70-30. Down here, we backed off quite a bit. So this was, I think it was 66% on here, now we're down 22% in here. We actually put 66% to the bond fund for protection, 2 in global, 3 in here. But you see how it changed automatically. So you can do that anytime you want. Just remember that you can't put trades in more than once a month inside of Washington State. So, DCP and Plan 3. But you can go in here and play with the models and balance between, conservative, strategic. And you can have different risk tolerances for different accounts. So if you've got your Plan 3 account or most of your money is, you can have that one set to conservative. But if you've got, your DCP, it's not as large, maybe it's more Roth or all Roth, and you want to maximize the tax-free growth on it, you can 100% make the DCP aggressive. So you can have different models and different plans. All right. If you guys have any questions on this kind of stuff, just shoot me a message inside of school or through my email, and I'll catch you guys later.